Welcome to this comprehensive guide on how to do Binance future trading. Binance is one of the largest and most popular cryptocurrency exchanges in the world, offering a wide range of trading products, including futures contracts. To get started with Binance future trading, you need to create an account on the Binance platform. If you already have a spot trading account, you can use the same account for futures trading. However, you need to enable the futures trading feature in your account settings. Once you have enabled futures trading, you need to transfer some funds to your futures trading wallet. You can do this by going to the wallet section and clicking on transfer. Select the cryptocurrency you want to transfer and the amount, and confirm the transaction. Now that you have funds in your futures trading wallet, you can start trading. Binance offers two types of futures contracts: USDT margined contracts and coin margined contracts. USDT margined contracts are denominated in USDT, while coin margined contracts are denominated in the underlying cryptocurrency. To open a trade, go to the futures trading section and select the contract you want to trade. Choose the leverage you want to use, which can range from 1x to 125x, depending on the contract. Then, enter the amount you want to trade and the price at which you want to open the trade. You can choose to open a long position or a short position. A long position is a bet that the price of the underlying cryptocurrency will go up, while a short position is a bet that the price will go down. It is also important to set a stop loss and take profit level to limit your potential losses and lock in your profits. A stop loss is an order that automatically closes your trade when the price reaches a certain level, while a take profit is an order that automatically closes your trade when the price reaches a certain level. Binance also offers a variety of order types, including limit orders, market orders, and stop limit orders. A limit order is an order to buy or sell at a specific price, while a market order is an order to buy or sell at the current market price. A stop limit order is an order to buy or sell when the price reaches a certain level. In conclusion, Binance future trading offers a wide range of opportunities for traders to profit from the cryptocurrency market. By following these steps and using the right trading strategies, you can successfully trade futures contracts on the Binance platform. Always remember to use proper risk management techniques and never risk more than you can afford to lose.